Let's take it over to Alan Knuckman, the Chief Market Strategist at St. Paul Research. Alan, I'm wondering what you are up to in this very rock and roll kind of a trading week. What's happening with your positions?
Hello, Angie. It seems so much better to sell too soon after this sell-off. We had 10 consecutive winners between Christmas and last week of 50% and 100%. We also unloaded some of the January expirations at losses to lighten up and be lean and mean once again.
What are you finding as you're tracking some of your trades this week?
All right, let's talk about our current positions. We've got March, again, no February. Plenty of time to be right. March, second half of Nugget, and also FXI, which is forming a bottom base. April options, CSIQ, which is Canadian Solar. Twitter, let's see if it can bounce back after these new lows. And UNG, we're going to have a lot of cool weather here, I guess, in the next coming weeks. June options, we've got the second half on LVS. That was a nice play very quickly. And also AT&T. So we're seeing some movement there. Again, the theme here is we've got plenty of time to be right. And also a January of 2023 position in Credit Suisse.
Your new trade trigger takes us to tech. And I know you love finding unloved stocks. What do you have for us, Alan?
All right, today's trade trigger, Intel insiders. That's what we see. We see insider buying of Intel stock. Now, this is a stock that's been shamed and not loved. It's been trading between 55 and 60, 50 and 55, for 6 months. That targets a breakout to 60. And in the bigger picture, between 50 and 60 for 9 months. So again, this is a stock that's down. It was down 15% last year when obviously tech was up. So we've got a lot of potential here. I'm looking at the June 45 call. 45 seems to be a super support level. 48 is the 1 year low on this stock. So we're able to have the right to buy significantly lower. The 45 call with the stock trading at about 52 is $7 in the money, trading for about $8.50 or so. So a modest break even, about $1.50 higher with 5 full months of time.
Let's get your trading day takeaways.
All right, trading takeaway number 1, WA. Not as in wow, but W-A-W. So I have a little bit of a Canadian accent, so I thought I'd go with that. That stands for what a week. That reversal on Monday, which we need to build on, was very significant. New lows and rejection of those lows with a higher close is very positive. Again, the key after a selling shakeout like that, and a violent selling shakeout, is to see the market build on that bottom. Number 2, steps to success. Well, how does it get there? Number 1, the S&P has to get above the 4,500 midpoint of this drop from the top, and the VIX has to get below 2650 after doubling in a week. In the big picture, tech's not dead yet. Tech had a 3,000 point sell-off in the NDX, so a halfway recovery of that will signal a new rally to all-time forever highs once again, and a V recovery would signal nearly 20,000, which is 30% up above. It's done it every single time in history until it doesn't. And number 3, GPE, not GE, but PE. Look at this. The PE ratio is coming down because earnings are continuing to be super strong and prices are coming down. So that means stocks are cheaper in relative terms. And so that is very attractive once again.
Alan, we see that you are at the airport, so we hope that all of your trades soar. Thank you.
Thank you.
Go to businessfirstam.com for where to see our show on TV.